Good morning. Good morning, everyone. I'm Bagger Don at Stock Market Caddy, CADDIE.com. It is the Saturday before Thanksgiving, November 22nd at about 10 a.m. Saturday morning. You are looking at our trade manager for a timing model that we offer all of our members. Monthly members get to see this signal every night. Annual members get this tool on their desktop, so they get to see it every night, but they also get to see it on their own desktop. What is this tool? Well, first, let me introduce you to the symbols. This is the Dow, the Russell, NASDAQ, S&P futures contract. What is a futures contract? It's the overall indice, maybe comparable to an ETF, but it's more leveraged, and it's a prediction of the future where you can place a simple bet whether prices are to rise or fall in the future, and you can profit. And then this is the VIX, the fair gauge. In fact, let me reorder them. The VIX is first. As you can see here, the VIX went long. When? On November 14th. It is an inverse indicator. When the VIX goes long in this model, the likelihood is the market is going to sell down. And in this case, it didn't lead, it followed, because on the 13th, the day before, the Russell, the S&P, the NASDAQ, and the Dow all went short, warning our members, potentially warning you, that the market was about to correct. Now, you can use that signal in any way you would like. You may choose to stop averaging money in. You may use it to take profit in other positions. Or you may choose to buy or sell options. Or if you had come in with a futures contract and just merely mirrored this position, you would be up real time this morning, 26,797.50, nearly $27,000. Now the market rallied on Friday, so it's off of its high water mark. It was up close to 40,000. The Nickluas timing model is a proprietary trading model to Stock Market Caddy. Running on a chart are three data streams: the underlying data of each market, the underlying data of the VIX itself, and the underlying data of interest rates. Exactly what pushed the markets up on Friday. It is a mathematical formula. Nothing to look at, no stories, no narratives, just tracking the key metrics that move the markets up and down. I am Bagger Don at Stock Market Caddy. If you want to see this model every night, you can do so by becoming a monthly member for $100. $100 a month, and you would have had that. If you want this tool on your desktop, you do need to go through something called a Q School, and then you can choose to become an annual member. By the way, at the end of the year like this, normally the Q Schools are 3+ weeks. We are virtually doubling the length, extending it an additional 3 weeks at no additional cost if you want to take advantage of that additional time as self-paced. The offer being, join the Q School, get access to the videos, get access to some of the programs, learn at your pace for 3 or 4 weeks, get your questions ready, and then after the first of the year, spend 3 to 4 weeks with me one-on-one and find out what it means to become a mechanical, algorithmic trader. Have a great Thanksgiving, everyone.